Ladies and gentlemen, welcome back to Daily Bread. It's been a while. I'm glad to have you. I'm your host, David. Haven't done the show in about 6 months. I think the last episode was June or July, and happy to be back. A lot has happened since then, obviously, in the crypto world. So I don't know. I'll just jump right into it. We'll start with a few notes on the show that'll be different. I will no longer be doing everything myself, which is nice. I used to edit and do all the post-production, everything, thumbnails, the whole thing. Now I have an editor-producer, so they're going to be helping me out with the show. And what that means is there will be a long-form version that's like the normal version that's going to be like an hour, whatever the normal length is. And then there will be a shortened, edited version that will come out later. If you don't want to watch like the full thing and you just want the highlights from the show. Also going to be bringing back some interviews. I'm going to try to interview more traders. I'll be honest, I didn't enjoy always interviewing founders, and that's why I stopped, because it became very, very, very repetitive of like, well, how'd you get into crypto? What do you like? What's your project? Give it, it's like very repetitive and boring, and I didn't really like it. I may still have some founders or projects on, but I'm more interested in like traders and investors and getting their takes on things rather than traders all the time, or rather than founders all the time. So less founders, more traders, but there will still be the solo show as well as the interviews. I'm going to try to make this weekly. Right now, the schedule is going to be, I'm going to record these on Wednesday evenings, and then hopefully they will be up on Thursday mornings, or by midday US time. We'll see the schedule. I'm going to see what works. So this may change a bit. We're going to test things out in the beginning here, but ideally I want this to be a weekly show again, going forward. And I think that's pretty much it. If you guys have any traders or anybody you want on the show, let me know. I'll see if I can get them on. A lot of you probably do not know me, because the last time I did an episode, I had like less than half the followers on Twitter I do now. So if you're coming from Twitter, hello. This is not the first time I've doxed. I have plenty of videos that you can go watch from the bear market. But this is the first bull market Daily Bread. So I think we should just get right into it. So I wanted to start with just the state of the market and kind of catch up, since I literally haven't done an episode. I think the last episode I did was when the BlackRock ETF first got announced. I think that was the last one. So a lot has happened since then. And obviously the ETF trade itself has been the biggest narrative driver of price action over the last month or two. So I wanted to give my big picture ideas on the ETF trade itself now that we are in December and approaching the ETF approval dates, potentially between January 5th and January 10th seems to be the date range, but also kind of the longer term next year or so views. So the ETF trade itself, I think, has given us a ton of juice, and I don't know how much more juice there is to squeeze on that, at least as far as Bitcoin goes. We may still continue to go to newer highs. At the time I'm recording this, Bitcoin is 42.7, and we tapped the high of 44-ish area. So we may continue to go higher. It's hard to make predictions because a lot of this stuff was just driven purely by an insane spot bid that was totally relentless. That kept coming and coming and coming, and they kept putting major bid walls, and every time it seemed like they were done buying, they would buy more. Some of that was Saylor himself on Coinbase. A lot of that was on Binance. But I don't know. The thing with Saylor is that he announced his next 750 million Bitcoin that he's going, or dollars worth of Bitcoin that he's going to buy. That was 2-3 weeks ago now. I don't know how quickly from those announcements he begins buying, but typically there's a few week delays, I believe. So it could very well be that right about now or soon, he is going to start buying even more Bitcoin spot. So I don't even know. A lot of, it's funny because there was this mysterious Bitcoin bidder. Who is it? Is it BlackRock seeding the fund? Is it other institutions getting in? And then it seems like most of it was just Saylor again. So that's kind of frankly, good news in my opinion. Some people say it's bad news, but I think it's good news because it means that all those people have not bought yet and they still need to buy. And so we'll see if the Coinbase spot bid returns in force. And if it does soon, it's probably just more Saylor again. even though a lot of the custody for a lot of the Bitcoin ETFs, including BlackRock's, will be on Coinbase. Now, how they will acquire the Bitcoin for seeding, they may do OTC, they may buy on market. I don't know. I don't frankly know a lot of the mechanics of how that works. And I don't think anyone really knows exactly what they're going to do. But nonetheless, the ETF trade, I think everyone's aware of. What will happen going into it? You know, the interesting thing is that it's become pretty consensus that the ETF will be sell the news. And in the beginning, I was more with it, a couple months ago. And now it seems like it's very consensus, which it may very well be, right? If everyone thinks it's sell the news and everyone sells on the news, then it's sell the news. What happens specifically on the day of or the couple days surrounding the ETF announcement is very hard to predict. I would assume we see some type of spike up, sell down, just tons of volatility, right? That's the only thing you can probably predict confidently. As far as specific price action, it's anyone's best guess. But more importantly to me, I think, is what happens after. Because say it is sell the news, right? And I assume there will be a lot of selling just because a lot of people will be up a lot and want to take profits and de-risk after this big event. If it is sell the news and say, I'm just going to throw blind numbers. This is not prediction at all. But let's say like Bitcoin goes like over 50K or hits 50K or whatever on the day of the event. And then, after that dumps back down to 40 or something like that, right? And there's just major volatility. I think whatever the dump happens, I think you probably buy that, right? I think you probably buy that dump and you probably, the other thing is you want to watch the flows on the ETFs themselves. I think the tricky part here is a lot of people are going to be watching like the instant flows, the day of, the first week flows. And part of me wonders, will those be a little bit of a psyop? Because I don't know how fast or how instant all these, funds on the sidelines are waiting for this ETF. And then as soon as the ETF happens, they're just going to start buy. I don't know that that's going to happen right away. It may very well, but I think a lot of people, I think there's a very likely scenario where the ETF flows are kind of slow right off the bat. And a lot of people get turbo bearish and say, that was like our mini cycle. It's over. We're going down. And we do. And then slowly but surely in the coming weeks, you see more of a trickle in. And I think, I just think that you have to maintain a bullish outlook over the next year. And a lot of these specific short-term events are going to be very easy to lose longer-term conviction in. Now, if you're a trader, that doesn't mean that you shouldn't take advantage of the volatility. But as far as like longer-term spot bags and especially longer-term entry possibilities, I think there's going to be some great ones. And especially on alts. If BTC does nuke, I can only imagine what alts would do, right? We would see a tremendous dump in a lot of these alts. And I think that's a great opportunity because I just think you have to be very bullish on Bitcoin and crypto over the next like 12 to 18 months for a variety of reasons. One of the big ones is just what happened today with the FOMC. I'm recording this the day of FOMC meeting where Jerome Powell basically said for the first time that they are considering rate cuts, that rate cuts are now on the table. Before it was something that it was not even a discussion. We'll get to it when we get to it. And now it seems like, oh no, these are something that are more on the table. And I think even more bluntly, Janet Yellen, the Secretary of the Treasury, said that if inflation is coming down, then it very much justifies doing rate hikes to keep real rates stable, right? She much more bluntly said it. Jerome Powell was a little more coy. But I think the message is very clear, and this is something that a lot of people have been saying, is that rates may come down much sooner than expected. And it just goes to show that macro experts and geniuses have just been totally wrong. Frankly, the majority of them have been totally wrong. They started by saying, oh, there will be a recession in the first half of 2023. And then when that didn't happen, they said, there's going to be a recession in the second half of 2023. And now they're saying, oh, there's going to be a recession in the second half of 2024. Listen, I think trying to be in this prediction game macro-wise is very foolish. I think what you can know is where the trends are heading. And where the trend is heading is that inflation has come down, right? Especially the secular inflation, the core CPI, right? The core measurements. A lot of the inflation was driven by, you had the Ukraine war that drove up gas prices. Or I should say oil prices, and then natural gas prices in Europe, and you had lots of short-term supply constraints in during COVID, and all types of reasons why inflation spiked temporarily. And all those have mostly normalized. And then the core CPI, which is the main thing that the Fed looks at, has also begun to come down. The Fed cannot just keep rates high for as long as it would like to. There's many reasons for this. And one of the main ones, frankly, is just that the US has to pay that interest, right? And it's no secret that the debt has just continued to inflate, and there's no signs of slowing it down, and there's not really much of an interest or a mandate to slow it down, even from voters, right? It used to be a big issue back in the day. Oh, the debt is such a big problem, but because the debt has just kept going up and going up and going up, and they said, oh, when we hit 10 trillion, it's a disaster. And when we hit 20 trillion, it's a disaster. Well, now we're over 30, and I think the average person says, I don't know, maybe we can just go into infinite debt, right? Whether that's true or not doesn't really matter. The point is that the general public, in terms of their voting, don't seem to care that much about the debt, and certainly Congress doesn't care that much about the debt, right? We've had some shutdowns because of a few people within Congress, but for the most part, people don't care that much. And there's just not that much of a mandate to try to bring the debt down. And so because of that, interest rates matter quite a bit, right? Because those need to be serviced. And the longer that interest rates are high, the more service on that debt is going to come out of the budget, right? I forget the exact percentage, but a very non-insignificant percent of the US budget is now just simply paying interest, right? And then on top of that, obviously, you can only keep rates high for so long in terms of economic stimulus, and, it's in the best interest of the wealthy to keep interest rates low because it creates asset inflation. And so if you have all of this in mind, and the Fed and the Treasury are basically telling you, we are going to cut rates sooner than you think, and you already see risk assets reacting to this strongly, you see the bond market reacting to this strongly, I think the message is very clear. And so then you have to look at crypto and Bitcoin specifically. Bitcoin is in this very unique position now where it's got this duality to it, because it's both a risk asset, and I would still say it's more a risk asset than anything, but it is also very much becoming what it was always intended to be, which is this fiat debasement hedge. And, digital gold, right? That's the meme. And it's becoming increasingly real, right? It's becoming increasingly real that people are taking Bitcoin seriously. I don't know how else to put it. People are taking Bitcoin seriously. And you have this duality. The interesting thing with Bitcoin and crypto is that it's, in many ways, it is inherently reactionary. And I mean that in the political sense, right? I mean it is politically reactionary. And it's inherently because it's very core, right? If you look at the creation of Bitcoin, it came out in 2008, 2009, when we were going through the Great Recession, right? And there was the famous bank bailout controversy, and there was the famous, what was the protest called? I can't even remember now. Anyways, doesn't matter. You know what I'm talking about. Occupy Wall Street, right? It came out of that. Right? Now, whether it had already been in the works and all that, blah, 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 yes. But that's when it was launched. And Satoshi specifically referenced this, and all of the white paper and all of the early Bitcoin days were all about fiat's going to shit. We need a new alternative to gold. This is better gold, right? All that. The spiel, and I don't need to give it to you. But for a while, it was kind of a meme, and it was like the speculative thing, and it was much more like a risk asset than anything else. And there's been a lot of true hardcore believers, but especially in recent years, most people in crypto are much more in it just for the money and for the speculation than anything else. But now it almost feels like we've come full circle on Bitcoin. because back in the, I would say pre 20, I don't know. I guess really, like, I think the strongest Bitcoin believer era was like the 2014 to 16 era. And then in 2017, you started having like the ICO craze and all that. And then obviously in 21, crypto went into its scam era where I don't think there was a lot of belief in Bitcoin in 21. It was more like, oh my God, I'm just going to get rich on crypto. But now we've kind of come full circle where I think a lot of this is driven by, frankly, high net worth individuals, potentially sovereign funds, certainly institutions buying Bitcoin and acknowledging it's something that they need to own, if at the very least as a hedge for global fiat inflation, right? We are in an inflationary asset bubble. There's just no other way to look at it. And we are in one not just in the United States, but globally, right? If anything, if there's any currency that you should own, it's the dollar, right? Even though that itself is getting inflated to all hell. Every other global currency is inflating versus the dollar, right? There's just no way that Bitcoin is not going to go up in value in this current regime without some type of major regime change in the fiat system. Not to go all Bitcoin maxi here, but there's just no way Bitcoin's not going to keep going up on a long-term basis. And that's what I mean by it's inherently reactionary, right? It is a reaction to the regime. You wouldn't need Bitcoin if you didn't have mass debasement of currency, right? But we do. And because of that, there is a demand for something that does not debase, right? Now, gold bugs would tell you that's gold. But clearly gold price action, while it has improved in the past year or so, there's a lot of forces at play with gold that are not at play with Bitcoin. And frankly, in many ways, you know, Bitcoin is a better gold. I don't need to get into all the arguments there that's been done to death, the transportability, the ability to hide it and custody it and all this stuff. And so because Bitcoin is inherently reactionary to the regime, how it all ends up, I don't know. But what I can tell you is that it will keep going up over the next 2 years. That doesn't mean it won't have volatility. That doesn't mean we won't have big runs and crashes. But almost with certainty at this point, the lendiness of Bitcoin has set in. And you have to really think about it too from a perspective of a lot of people, not just in finance, but in the broader public who, how many times have they heard crypto is dead? Bitcoin is dead. Oh, is that still a thing? Oh, you're still doing that, right? I'm sure you've all heard it. At what point, how many cycles, how many times do they have to hear Bitcoin died and then, oh, you missed the generational buy opportunity and now Bitcoin's worth all this money. And oh, look at all these people getting rich on crypto, right? How many times are these people gonna see that and hear that and realize that, you know what, maybe this crypto thing isn't a fad. Maybe Bitcoin is actually legitimate. Maybe it really is here to stay. Right? And frankly, I mean, now it just becomes more obvious. I mean, we have Larry Fink going on television, right? The CEO of BlackRock will go on television and talk about Bitcoin, right? I don't know what more people want, you know? And I think one of the more fascinating things too is the resiliency of crypto, frankly, because it was just a year ago. It was November last year that FTX totally collapsed. And that was truly, I think, one of the moments where not just the broader public completely turned on crypto. Any financial, tech, whatever podcast you listen to, they were just like, crypto's totally dead. Who cares? This is over. It's a total fraud. It's a total scam. And then on top of that, just the general public. I mean, people lost a lot of money, obviously. And just the general idea of like, oh, the golden boy, Sam Bankman-Fried, FTX, the one that named FTX Arena and had Tom Brady and Steph Curry, this was all a fraud, bigger than Bernie Madoff or biggest since Bernie Madoff or whatever, right? That was like a year ago. And frankly, this year, it's been pretty good. It's been pretty active. We certainly had dead periods in the year, but I mean, you had the January out the gate rally in Q1. You had the meme coin season in April. You had the June, July, August rally with the initial, BlackRock ETF. And then now, basically since October, we've had this real, like what seems like the beginning of a new bull market in crypto that has coincided with equities, where it seems very real that people are just deploying money again. And so really the resiliency of crypto, I think, has been very impressive, even to people within it. I don't think even most people within crypto thought that if you told them imagine a year ago, imagine when Bitcoin was $15,000 a year ago, that it would be over 40,000 just a year later. I don't think most people would believe you. Most people, if you ask them, even within crypto, forget the broader public, just within crypto, would you make that bet? Most people would say, absolutely not. I would not bet on that at all. They would say, like, maybe we'd be back in the 20s, at the most 30s. They would not say we'd be over 40,000, right? No shot. No shot. I mean, people were like, crypto's dead, come back in 2 years. I mean, I remember having these conversations where it's like, yeah, maybe we just come back in a year, after FTX collapsed. So it's been much more resilient. And another thing too is that there was so much talk this year about the 4-year cycle and, what's going to happen? And so many people said the 4-year cycle is not going to happen because everybody knows about it now. Everybody knows about the halving or the halvening cycle, and everybody knows all this stuff. And that's true. And a lot of people, I think, were right that the 4-year cycle is not going to happen. But they said it in the way of, it's going to take longer. It's going to take 6-7 years instead of 4 because this was so bad. Crypto's so dead. People are so uninterested. And they were probably right that the 4-year cycle is over. But instead of it being elongated, it was front run. And that's the critical mistake so many people made. In fact, it's the opposite. In fact, the 4-year cycle is being front run. Everything is being accelerated, and even equities, frankly, right? Equities really got off pretty easy. Now I know it's been a very top-heavy rally, and I know it's been concentrated within a few stocks in general. But let's be honest, for average Joe, for most people, and frankly, many institutions, their biggest exposure is through the S&P 500 and NASDAQ. Right? That is their index exposure. So for most people, it wasn't a great time, but it wasn't that bad. It wasn't that bad of a bear market. Frankly, I don't even know if you could really, I guess you could call it a bear market, but I don't know. You certainly didn't get a recession, right? You certainly didn't get the greatest recession in the history of the world. This is the new Great Depression and all of these things that people were saying. You didn't get any of that. They're still waiting for the big one. And in the meantime, while everyone's waiting for the big one, we're pretty much back at all-time highs on equities. We're just this shy. And crypto has Bitcoin's up, more than 3x off the bottom. I don't know. I don't know. I don't know when the big one's coming, but I'm not waiting for it. And again, this gets back to this inflationary asset bubble. I think that a lot of people thought that after 2021 that was the peak, that things can't get crazier than that. And it's almost like, well, maybe they can. Because like I said, so long as you live in this regime, who's going to change it? Right? Who's going to change it? And I don't even mean regime in terms of like Democrats versus Republicans. I'm not talking about that because it doesn't matter, frankly. Like next year in the election, if Biden wins, Democrats spend lots of money. They historically are not concerned with fiscal issues. And if Trump wins on the Republican side, Trump showed us what he's going to do, right? We already saw 4 years of Trump being mad at Jerome Powell for not having interest rates at 0 because Europe had theirs at 0, right? And not caring at all, right? Trump very much measured his performance as a president by the price of the Dow Jones, right? How many tweets about the Dow Jones did Donald Trump make? So I don't really think who's president matters in terms of the fiat regime, right? Obviously it matters for other things, but in terms of the Are we going to lower interest rates and print money? I don't really think it matters who wins. And so if you acknowledge that, then why would assets come down significantly? And housing is a great example of this too. How many times over the last, I don't know, 20 years, probably longer, right? At least my lifetime, I've been hearing my whole life, especially since 2008, right? Because you actually had a housing crash. Since then, how many times have you heard, oh my gosh, houses are just getting too expensive. They're gonna come down. People can't afford them, blah, 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 blah. They haven't come down, right? The only thing that houses do is just kind of temporarily stop going up for a little bit, for the most part. They may come down a little bit in certain super hot markets that were like, you know, doubling in 2 years, right? And they came down a bit. But other than that, it's mostly just like my favorite chart that I like to post all the time on Twitter in terms of the up, sideways, the NEP. The NEC, the no entry chart, right? That's what I call it, the neck chart, the NEC, the no entry chart. That's basically housing prices. You know, a lot of houses that were 300,000-400,000 5 years ago are like 700,000-800,000 now, and they're not really coming down. They just temporarily stopped going up, and I don't see how that changes, frankly, because you're not going to have some great increase in supply. That clearly hasn't happened, despite housing prices going up tremendously. There is just no mandate to increase the supply. And you're just going to continue to have an unlimited amount of real estate supply versus an unlimited amount of fiat supply. And it's just a simple supply and demand equation, right? And if fiat continues to be debased, then all assets are going to continue to inflate. And that includes Bitcoin, that includes real estate, that includes equities, right? And so if you want to play crypto, the simple thesis is just like for average Joe Boomer or even just average Joe Millennial or whoever, it's like, well, everything is going to go up, so you might as well bet on the fastest horse, which is going to be crypto. And it'll be more volatile, but for most people, they're better off not trading anyways. They should just buy and hold for like 5 years, right? Well, if you're going to buy and hold something for 5 years, you might as well buy and hold Bitcoin or some other crypto, right? So that's like the high level thought process behind why you should just be net bullish over the next. I'll save the next year or two because I don't want to predict beyond that because it's impossible. But I think for the next year or two, you should be net bullish, Bitcoin especially, and then because Bitcoin is going to continue to go up, crypto as a whole will follow. And so that gets back to my point in the beginning, which is whatever happens surrounding the ETF, frankly, I'm not that concerned, right? Obviously, I'm going to try to trade the volatility and make money how I can. But I think trying to overly focus, so many people are overly focused on this specific event. And obviously, it's a huge event. Don't get me wrong. But I think that my kind of contrarian opinion is Bitcoin isn't necessarily going up that much. Well, I think the initial rally, I think the, call it the, 26 to 36K rally, the initial huge move up was a lot of people positioning for the ETF because that was clear that it was much more likely to be approved. But at this point, from 38K plus, I think a lot of it is just because equities have been ripping too. Like I said, equities are nearly back at all-time highs now. So it's not just crypto and Bitcoin that's going up. I think that a lot of this is just that people are realizing the asset bubble will continue, right? The show is going to go on in terms of assets going up only. The ramifications for society and all of that, that's not for today. What it means when the median home price in America is $1 million, I don't know. And if that sounds insane to you, go tell someone 30 years ago that the median home price in America would be like almost, what is it now? It's like 300,000 or something. And that's like median United States. I mean, forget it. If you live in any major metropolitan area, you're not going to get a house for less than $1 million in like 5-10 years. It's just where we're headed. So what that means for society, I don't know. What that means for Bitcoin is it's going to go up. That's what I can tell you. And just assets in general. Anything where there is a limited supply and the narrative for value around it is going to go up versus fiat, right? So that's the broad idea there. Let's move on from the Bitcoin kind of macro thesis and move on to crypto specific, because we don't buy Bitcoin here. Listen. With all that talk I give about Bitcoin, I don't even own Bitcoin. Okay, I trade around it and I outperform it. That's my job, right? Our job is, okay, we know Bitcoin and ETH or whatever are going to do what they do. Our job is to outperform them. We denominate our portfolios in Bitcoin. And so my plan to outperform Bitcoin is to bet on a few different categories. And that's kind of how I am approaching this bull market. So the main categories that I'm looking at are, one, by far my biggest category that I'm the most highly convicted bullish on is AI. I believe AI coins are going to be the number one category of coins in crypto over the next year in terms of the biggest, best performers. And I've been saying this since December last year. Exactly a year ago, I made a video, and I'll put a link to that. It's called like identifying the next big narratives. And I basically said AI will be the metaverse of this cycle. If you remember how big metaverse was in the last cycle, not just within crypto, but within everything. I mean, Facebook changed its company name to Meta. That's how big it was. I believe that AI will be the metaverse of this cycle, but so much bigger. I think the AI bubble, and now this is much more, common, but I've been saying this all year. The AI bubble is going to be the biggest bubble in the history. I mean, this is going to be very much .com 2.0. Like, I think NASDAQ is going to get hilariously stupid. Like, whatever you think is a stupid valuation for public tech companies that are in any way involved with AI, quadruple it, because it's going to get retarded, okay? And same goes for crypto. Whatever you think a big valuation is for an AI coin, if you're like, oh, wow, maybe this coin could go to 5 billion, try 50, try 100, okay? Because that's where some of these coins are heading. It's going to get so dumb, I can't overstate it. So that's my biggest bet by far is AI coins. Second, RWA, real world assets. This is the one that is much more faded by crypto natives, I should say, because I think, frankly, people in crypto are just looking for insane outsized returns. And so they don't care when you talk about putting treasury bills, T-bills on chain and real estate and whatever. And, oh, you're going to be able to get a passive 15-20% yield. People are like, I don't care about that. I'm trying to 10x my money in the next month. But these coins, these products are not for you. They are for the masses. They are for the boomers, okay? And nothing entices people more than the idea of passive income and earning more yield than they could get somewhere else and yield maximization. People love this stuff, okay? And that's where RWA is going to shine. Because if you look at what one of the biggest bubbles within crypto was last time, it was the Luna Anchor Ponzi. Why? Because Anchor was promising 20% annual yield. That seemed pretty reasonable, right? In the land of thousands of APY and ohm forks and all these food farms and Ponzi's, right? The average person is like, I don't buy that. I don't believe a 2,000, 10,000, 10 million APY farm. But you tell them one that's 20%, right? Based on a stable coin. Oh, I can buy that. I can believe in that. And the exact same thing is going to repeat with RWA at such a bigger scale. It's not even gonna be close. It's gonna be massive. I tweeted a few months ago, and this has been the top of my mind ever since I thought of it. I just shot the tweet out. I said, I promise you, there will be $100 billion RWA anchor. Basically, there will be a Luna anchor that will go to 100. Luna went to what was the top of Luna? 50 billion or something, 60 billion. There will be $100 billion RWA coin. There will be many RWA coins, okay? I'm telling you, this is one of my biggest convictions. I just think all this stuff is going to move on chain, and I think that the rails that have been built over the last few years and the regulatory hurdles that are being overcome are really underestimated in terms of RWA. And I love that people, especially like crypto natives, totally sleep on it. And I love that people say, "Oh, I don't really buy that." Great. I love that. So that's another one. The third category that I'm very interested in, and this is one that's really started to heat up over the last month, but still very early, is Bitcoin ecosystem in general. If you think Bitcoin is going to be, this great asset that everyone's going to want to own, and it's going to be on every, financial news station for the next 2 years, Bitcoin is it's just shy of $1 trillion asset. It's like 800 something billion right now. And it's going to be $1 trillion, $2 trillion plus asset very soon. And it has no ecosystem, right? It's not like Ethereum or any of these other chains where you have the main coin and then you have this whole ecosystem of coins. There's nothing built on Bitcoin, very much by design, right? Very much on purpose. But that's changing. And whether the maxis themselves like it or not, it's happening, and the miners are in control. And this solves a lot of the problems with Bitcoin that famously people were saying, well, what's the incentive if you keep having more and more halvings? What's the incentive for miners to keep mining this, right? It's already a business that's a bit cutthroat, and a lot of them lose money and all these arguments. And now all of a sudden we've had this boon with ordinals and BRC20s that miners make a ton more money and are way more profitable mining these blocks, right? And it's contributing to the Bitcoin security. Now, a lot of Bitcoin maxis are going to not like that, but it's just true, right? Because now you have more of a security budget to pay these miners. So whether maxis like that or not, the purists, it's going to happen. It's happening, right? Builders are going to build. You can't stop the tech from being built. So the entire BRC20 category right now is literally like $1 billion combined, all the coins. I think that alone, we're talking about the biggest asset in crypto having no ecosystem, okay? I think this one category alone would be at minimum worth $100 billion. I think the whole category is going to 100x probably in the next year, right? Because think about it. Bitcoin is going to be the hottest, most talked about asset, right, in this inflationary asset bubble. And you're going to have tons of funds and VCs and all these people who are going to want to get exposure, but they can't buy Bitcoin, right? If you're a crypto VC or some type of discretionary fund, you're supposed to outperform Bitcoin. Well, what's one of the easiest, most obvious theses that you could provide them? Well, Bitcoin is already worth over $1 trillion. But the ecosystem is worth nothing. It's worth literally 1 billion combined, all of the coins combined right now. And they're building all of the building blocks, the foundation that Ethereum and other chains already have. There's no decentralized exchanges there's no Uniswap, right? On Bitcoin. There's just beginning to be some very rudimentary marketplaces. There's no borrow land. There's nothing. There's not even the DeFi building blocks, let alone the more advanced applications that can be built in the future. And you can go to all of these investors, all of these funds, and this is like one of the most brain dead theses ever. And it's, hey, this is going to be the biggest asset in crypto. It already is the biggest asset in crypto, and it's only going to get bigger, and it's going to be on everyone's mind in the next year. Both funds, the public, people are going to start talking about how much of their portfolio should be allocated in Bitcoin, all of that, right? Bet on the ecosystem that's new and thriving. This is like betting on what's the total, Uniswap alone. Uniswap by itself went to $25 billion in the last cycle, right? Just by itself, just one coin went to 25 billion. The entire Bitcoin ecosystem is $1 billion right now. I think that 100x is easily, I think it's one of the most easy things to pitch. The coin, I'll just say the coin I like most is Track. I'm gonna get it. I don't want to talk specific coins in this episode. I'll just shoot off the ones I like. On RWA, I like Kanto a lot. There's some other stuff I like. I'm not a big Maker fan for various reasons. I'll get into that. I'm gonna do a whole separate episode on like specific coins. And then AI coins, OLOS and Tau are the two ones that I like a lot. I like some of the infra plays. There's some coins that haven't come out yet that I'll talk about in the future that I like a lot for AI. But anyways, those are the coins I like. So those are like the broader categories that I like a lot. And then you'll also have other categories that I think are interesting. I'm less interested in them in terms of like if I had to make my top 3, it would be AI, RWA, and Bitcoin ecosystem in terms of the risk reward there. I think GameFi will still have plenty of activity. I think there's going to be tons of GameFi scams and all that stuff, and that'll be fine. And then I think DeSci, decentralized science, is like a very nascent category that's very, very cheap right now. A lot of the coins. The problem is I don't really know which coins to buy. There's some small caps that I like, but all of it is very, very small. And you've seen, obviously, Vitalik has been big on longevity for the past few years. Same with Brian Armstrong. He's big on the idea of decentralized science. And then even CZ came out and made a tweet recently about biotech and all this. And I think it's a great narrative if you're looking at like bubbles. I mean, biotech is one of the most in terms of equities. It's historically one of the most volatile, bubble-inducing, overinflated value equity categories. And then you combine that with crypto, and it's like a match made in heaven. So I think there's a lot of narrative building there. And then you also have like outside of crypto, you have like Brian Johnson is becoming like a celebrity now with his anti-aging thing. And I just think a lot of this like anti-aging longevity stuff, this post-humanist whatever is going to be bigger. And I think you're going to have a lot of DeSci with that. And I think DeSci actually is like legitimate too, because a lot of this stuff, I don't work in academia, but I know from people who work in academia that a lot of this stuff is like totally gated off, and it's totally, hyper overregulated, hyper controlled, hyper institutionalized, right? In terms of like, you can't even get access to like, there's I forget I'm sure plenty of there's these like, sites where you can get these academic papers for free and these studies and all this, but it's like totally blocked off. There's everything's paywalled. People get in trouble. Like I forget. I'm not an expert on this, but you get the idea. Everything is like peer-reviewed, paywalled, blocked off. Did you get approval for this, approval for that? And DeSci is like kind of like the opposite. It's very similar to like finance, right? It's like finance is like this totally hyper-regulated. You need to KYC, AML, every penny that goes through the system. And if you have a transaction more than $10,000, we want to know what it's about and blah, 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 blah. And then you have like DeFi, right? That's like doing the opposite of that. And DeSci, I think, could very much be a similar narrative. But I don't really have a pick there yet. I don't have any very good picks there. Still researching that one. So those are some like other nascent categories, and there's other stuff. I'm into like DePIN, decentralized physical infrastructure. I think that very much will go in with AI. In terms of like GPUs and things like that. So these are categories that I'm all interested in. But if I had to focus, if I had to allocate, and what I am allocating towards, it's like AI, RWA, and Bitcoin ecosystem stuff, because I think those are slam dunk winners. I think you can make a very clear thesis for all of them. It's very easily explainable to everybody, and especially a lot of the funds and money that's gonna be chasing this market, and to retail. So I think those are all very straightforward. So anyways, I think I will leave it there for today. I hope you guys enjoyed. Glad to be back. First one back. I hope it wasn't too rusty. Listen, it's hard to do these monologues. I was a little nervous coming in. I had to prep. I was taking notes. I was thinking about what I was going to talk about. So hopefully you guys enjoyed. There'll be a lot more episodes coming soon. Like I said, I'm going to try to make this a weekly schedule. Come on Thursdays. There may be some variability. We'll see what the schedule looks like. In the future, I may do live streams as well too, but I'm going to start with just the recorded videos. And like I said, there's gonna be a long form version and a shortened version that will come out a little later. Interviews coming soon. Let me know who you want me to talk to. I'm gonna try to reach out to a few people as far as traders go. But I'm still gonna do the solo show mostly. Yeah, any other feedback, I'm open to it. So thanks for watching, everybody. Make sure to obviously subscribe, blah, 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 blah. Shout out to Bybit the sponsor of the show. Use the ref link in the description. It helps the show out. Listen, we got people to pay now. We got people on payroll, so we need support. It's not just me doing everything now. So in many ways, you are creating a job if you use my Bybit ref link to trade. Plus, Bybit's just like a great exchange, very liquid. You know, Binance is coming down a little bit after all the DOJ stuff, and Bybit's kind of the place to be. So use the Bybit link to, and you get bonuses too. You get like, there's like thousands of dollars in bonuses if you just like deposit and trade the link. So go, it's like free money. Just go do it. Plus, you're gonna leverage trade anyways, right? You're gonna do it anyways. So just use my link. Be a nice guy. Okay, support the show. All right, anyways, guys, thanks so much for watching. I will see you next week.